Hello, this is Balakrishnan welcoming you to BALAS Accountancy Special Classes. Well, last episode, we just made a footstep into chapter depreciation and we confined ourselves to straight line method. Okay, at that time I told you we will be discussing the other method that is in your syllabus. Only two methods are there. The other method being written down value method. Well, I thought if I take up this small objective type question, that is nothing but DK Goel Cbse 2019 edition, page number 16.53, question 1. You will get the fundamental difference between what is a straight line method and what is a written down value method. I'm reading out the question for you. Well, it will be shared to you later on, but for the time being, choose the best alternative. What's the amount of difference between the closing balance of two machines? After 2 years, if both the machines were purchased on the same date with the same amount of rupees 1 lakh, machine 1 is depreciated by 20% on straight line method, and machine 2 is depreciated by 20% on diminishing balance method, and they are given 4 alternative answers, and the correct answer I am explaining to you. It should intend give you the fundamental difference or distinction between SLM and WDB. Well, what they told us in the first year, the cost of the machine 1 was 1 lakh. Okay, machine 2 is also 1 lakh only, but the machine 1 is subject to straight line value method depreciation. Obviously, it will be 20,000 depreciation. Why 20% has been given? 20% they are given, the rate being common under either method, right? So their book value will be at the year end, book value will be 80,000. Now, what is book value? Book value is nothing but original value or original cost of the asset minus till date depreciation written off at any point of time. That will be the book value. So first year end book value is 80,000. Original cost minus that year's depreciation 80,000. Now let us examine machine 2, that is under written down value method. Depreciation will be same because 20%. There will be no difference at the book value after the depreciation. Fine. Provided the rate of depreciation is same. Fine. Next year, what will be the year beginning book value under straight line method? 80,000 will come here, right? Yes. And what will be the depreciation? It has to be 20,000. It's a straight line method. Now, year after year, the common same one and the same amount will be written off. We have sufficiently discussed in the last episode. Is it not? Yes. So that being the case, what will be the book value? 80,000 minus 20,000, nothing but 60,000 will be the year end book value. Okay. Now let's examine the Zenoria at the second year end as far as machine 2 is concerned. That is under WDB. Year beginning balance as usual 80,000. Depreciation will be based not on this original cost, but the year beginning balance. That is 20% of 80,000. That is nothing but 16,000. That being the case, book value will be 80,000 minus 16,000, nothing but 64,000. That is the fundamental difference. Okay. See the depreciation change, see the book value difference, right? That being the case, this is the conclusion as per answer C. Value of machine 2 is more by rupees 4,000. That means 64,000 minus 60,000. The answer C. So we have worked out one objective type question, and also you understood the fundamental difference between SLM and WDB. You understood. Okay. Thank you. Well, let me explain elaborately about the distinction between these two methods of depreciation. That is straight line method and written down value method. There are mainly 6 items. Item number 1, amount of depreciation. Under SLM, depreciation is charged same every year, or equal amount of depreciation is charged every year. Then you may ask, suppose an asset is purchased mid of the year or on later part of the year, what you will do? Of course, that is proportionately for the year, but doesn't mean it's not taken equally. Okay, fine. Whereas under WDV, depreciation goes on decreasing year after year. Let us verify it here. SLM, first year and second year, both 20,000. Is it not? So it is same every year, equal amount every year. Third year also means it would have been 20,000 only. Whereas under WDV, first year 20,000 and it got decreased to 16,000 next year. It will get further decrease in the third year and so on. Okay. Now comes the second point. Second point will be basis of calculation of depreciation. Depreciation is charged on the original cost as far as SLM is concerned and on the reducing balance on WDV. Let's base on this one. First year and second year on 20% on the original cost. Clear now? Whereas in case of WDV, first year, of course, on the original cost, it has to be like that. And second year, I have not based on this original cost. Rather, I have based on the reduced book value, 80,000, yesterday's closing balance, today's opening balance. On that, I have based 20%, I applied, and I got 16,000. So it confirmed reducing balance. On the reducing balance of the asset only be based on. That is the main chief distinction between these two items or these two methods of depreciation. Now, third one is zero level. What is the zero level? Depreciation can be reduced to zero as far as straight line method is concerned. Don't you think so? If you go on reducing 20,000 a year, up to 5th year, it will become zero as far as SLM is concerned. Whereas, since we are applying a constant rate of depreciation on the reducing balance every year, it is never possible to get into zero. That you can verify yourself. Okay. And the fourth, approval of income tax authorities. See, WDV is the only one approved by the income tax authorities. SLM is not approved by the income tax authorities. Okay. And now comes the fifth one, combined effect of depreciation and repairs on profit and loss account. Well, this depreciation and repairs both are expenditures. Okay, if we take together, we get an X amount in a year. This X amount will be lighter in the initial years as far as the SLM is concerned, and it will be heavier in the later years in the same method. Whereas under WDV, it will be almost equal throughout the years. This I can explain to you with illustration when I will be sharing the question. At that time, this also will be explained. Okay, fine. And the last one, suitability. Well, straight line method of depreciation is suitable for assets in which repair charges are less and the possibility of obsolescence is also less. Fixed assets such as land and buildings together. Okay, patents, trademarks, etc. Fine. Written down value method is suitable for assets which require more repair expenses with passage of time, and where possibility of obsolescence is more due to technological changes. assets such as plant and machinery, vehicles, etc. comes into this category. Okay. To conclude, in practice, the WDV is more widely used. This is because the depreciation in this method goes on reducing according to the shrinking value of the asset. Well, I have now explained all the 6 points, and you need to have an illustration as far as the point number 5 is concerned that I am giving you now. I mean, when this sharing part will take place. For the time being, let me take up 2 more objective types of question explained so that things will be more clear. So students, already one objective type question I have worked out for you at the very beginning of this class. The second one of the day is this one. DK Goel, Cbse 2019 edition, page number 16.54, question being number 13. Well, it is like this. A Limited purchased a machine on 1/1/2019 for rupees 1,20,000. Installation expenses were rupees 30,000. Let us just mention that fact here. On 1/1/2019, cost is 1,50,000. Because 1,20,000 plus 30,000. You know, by this time, installation expenses will be very much a part of the cost of the machine. Okay. Now, residual value after 5 years, rupees 5,000. On 1/7/2019, expenses for repair were incurred to the extent of rupees 2,000. Depreciation is provided at rate of 10% per annum under written down value method. Here is to strike in your mind. Under written down value method means the residual value information is of no relevance to me. And of course, I'm very much thorough that the repairs amount is nothing to do with calculation of depreciation. Those of you who have not watched my previous video, BAC 016, kindly watch them, then only you join this class. Otherwise, you won't be that much comfortable. Okay, wherein I have explained all this. Fine. So these 2 information you are summarily ignored. Now, what they want under return on value method, only 10% rate they are maintaining. So total depreciation after second year, how much? Okay, this I explained to you. Let's see year end what will be the depreciation. 10% on this cost, that is 15,000. That being the case, year end book value will be 1,35,000. Okay, and next year for one full year depreciation will be on this amount because WDV 10%, 13,500, and book value after depreciation at the year end value will be 1,21,500. Now total depreciation one way 50, this method the first year depreciation plus this depreciation 28,500, or in other words, original cost minus the latest book value, this minus this 28,500. That answer has been given in the answer D. So that's all. Now let us take up the third one of the day, that is question 14. And well, that has been said in CA CPT June 2012 exam also. It is like this. The WDV of an asset after 3 years of depreciation on reducing balance method at rate of 15% per annum is rupees 49,130. What was its original value? Well, this kind of sums will immensely help you in tackling a full-fledged depreciation sum later on. Okay, it will be side work of that a full-fledged sum, right? How to deal this kind of a small sum, right? This is the formula to be adapted. Given book value into 100 upon 100 minus rate of depreciation for as many years. Simple like that. I repeat, given book value into 100 upon 100 minus rate of depreciation for as many years. That being the case, here given book value is 49,130. Rate of depreciation be 15. 100 minus 15 is 85. So 100 upon 85 for 1, 2, 3 years only they asked. We work out, you get 80,000. That is answer B. We want to make this concept very clear. Let us assume the cost of machine is 57,800. Depreciation is 15% per annum. So naturally, depreciation amount will be 8670 because 57,800 into 15 upon 100. Then book value will be how much? 57,800 minus 8670, 49,130. Now let us check adapting this formula. 49,130 into 100 upon 85. How 85? 100 minus 50. You will get 57,800. This must be very thorough so long as you want to deal with the depreciation chapter. Well, my dear students, so 3 objective type questions I worked out. I'm in a very systematic way I'm moving because this all will help you in tackling the tough sums of depreciation. In fact, I told you don't have that big tough sums prescribed in your syllabus, but whatever is there, this method will help you. Okay. Now what I'm going to do is the sharing part, printed material sharing part. In that one, in this particular video, I had to explain, as already told, one illustration in respect of the distinction of WDV and SLM. One illustration I have made so that that particular point will be very clear. So please continue watching this video. Thank you. Well, students, as I already said, the printed material is being shared now. Well, this is a table showing the explanation, rather an illustration, as I already told you, about the combined effect of an X amount, combined effect of depreciation and repairs of a machine. Let us say that is an X amount. What will be the effect of the same on the profit and loss account under either method, under SLM and WDB? Let's assume the cost was 1 lakh. 10% on original cost is a depreciation. We know that on original cost only depreciation is charged. So it will be 10,000 year after year. Right. Repairs are taken the first year, assumed as 1,500 and 500 each. In the next 2 years it gets increased, and subsequently 1,500 rupees each it gets increased. That is the nature of the repairs. Initial stage, the repair expenses will be less and less, and as the year goes on, the repair expenditure will be more and more. Now, what is the combined effect of these two? 11,500. Similarly, all other items, this is the combined effect. This is what the X amount I told you. A careful examination of this column, you see, initially it's not much amount. Combined effect is somewhat lighter. Okay. As the year progress, it gets heavier. Okay. So that's why let us conclude that under SLM, combined burden of depreciation and repairs will be lighter in the earlier years and heavier in the later years. This has been confirmed. You know the depreciation is constant. Okay. And depreciation plus practical way of repairs amount has been taken. Now let us move to the WDB method. Under WDB method, 10% of the depreciation on written down value method. First year it will be same 10,000. Next year, what will be the depreciation? We don't look up this original cost as is done in case of straight line method. We look up the reducing balance. So on 90,000, 10%, 9,000, and next year it has become to 80,000 on 8,000 and so on. So the depreciation gets reduced. See, in fact, you get a clear idea about how what the methods of depreciation works also on going through this table. Fine. Now let us place the same repairs here. Of course, whether you are under SLM or WDV, repairs is a different phenomena and that is constant for either method. Okay, that method is nothing to do with the repairs. So repairs, the same amount I have copied here. And this is the combined effect. 11,500, 11,000, 10,500 like that. You don't find so much jumping after 2-3 years from a lighter to heavier like that. It's almost similar, no? That's why let us draw a conclusion that under WDV, combined burden on depreciation and repairs will be almost equal over different years. That's what I wanted to inform you while I was doing in this whiteboard, this particular point, okay, because it was a little inconvenient for me to do it over the board. So that's what I'm sharing it. I think it's very clear to you, this table. You should not have any doubt whatsoever. Now, let me share the question. The question is like this. Question number 1. See, very good font. It has been typed in very big font only, so that you should not have any problem in writing down. Those of you who could not manage a textbook, kindly write down and keep it with you. It may be useful to you in future. Right. I'm pausing it so that you will be comfortable in writing down. These are the different answers they are given, and I have convinced you the correct answer. Next question. Different answers. These two I have worked out for you. The last one. Well, what you should do is that, basing on this printed material sharing, you should yourself work it out. In case of any doubt only, you should refer to my discussion. Okay, students, that's all in this episode. Take care. Have a nice day. See you soon.